There's a really great section in our last podcast, so we clipped it out and want to share it with you guys separately here.
Let's talk about retirement accounts and how your retirement accounts are protected. This is actually pretty easy. We have two different categories of retirement accounts. Okay, we have 401ks and we have IRAs. Now, 401ks have unlimited creditor protection. IRAs have unlimited, except, and I'll get to that, there's an exception here in a few states. What this means is you can file bankruptcy, have $2 million in your 401k, and the creditors can't come after you. You can bankrupt all your debts. Those people have to go away. They get a bankruptcy notice and nothing, and you get to keep all the money in your IRA or 401k. So your IRAs and 401ks have automatic asset protection built into them. When Congress created retirement accounts, they wanted to incentivize people to save, and they did a couple things to incentivize us to save and build long-term wealth in IRAs and 401ks. One of the things was all the tax benefits from IRAs and 401ks. But the second thing that they did was asset protect them and said, you know what? People are going to build wealth in these for the long haul, and we want them to be able to rely on them when they hit 59 and a half and hit retirement plan age, so they don't have to work their whole life. How do we protect them? Well, they said creditors can't get them, period. O.J. Simpson, not guilty at the criminal trial, held civilly liable for the deaths of Nicole Brown, Ron Goldman, right? And those families had judgments against him of 30 million or more. How did OJ live after that and still live a pretty nice lifestyle? His income coming from his pension. Now, they seized a lot of his personal assets, or he had to sue him, like his Heisman Trophy even, and things like that. He was forced to sell those. There was no asset protection for those types of personal assets, but the money coming out of his pension that would then hit his bank account that he could then use, couldn't touch it, okay? That was essentially a 401k or an employer retirement plan. This is under ERISA. This is a federal law that protects your retirement account from creditors collecting against it. Now, that's an unlimited amount. You could have a $10 million account, million, 500,000, 50 grand, whatever. That is going to be protected from creditors, again, even if you file bankruptcy. Now, IRAs are a little different. In the IRA equation, most states protect them in an unlimited amount. There's a few states that accept that. California being the biggest. Shocker. What California says, because IRAs are protected under state law, and most states, whether it's a traditional IRA or a Roth IRA, are going to give an unlimited protection there. California and Georgia, there's a couple states have limited protection here. California and Georgia being the two big ones. What those two states say is your IRA is protected here from creditors, but only to the amount necessary for the owner to live off of or their dependents, whether it's a spouse or children. And so if you're sued and some creditor has a lawsuit against you personally, and they're like, all right, I want to get into your IRA, in the states of California and Georgia, you have to prove that you need to live off of those assets. You need that money to live off of, or your dependents do in the future. Everyone else in all the other states, you can go tell that creditor to go pound sand. They're not going to be able to collect on your IRA. It is going to be protected from your personal creditors. All right, so that's how your retirement accounts are protected. The nice thing is, for your personal liabilities, when you get sued personally, your IRA and 401k are protected from themselves and the liability you create personally.
I hope you found value in that video and took something away from there that can help you on your wealth building journey. Make sure you're subscribed though to the channel, because I got tons of information I want to share with you to make it easier, faster to build wealth. We'll see you next time.